So there's four factors there that are really hard to solve for a number of reasons, and especially in layer one.
In today's episode, our featured project is Mobius Finance, a decentralized trading platform optimized for trading synthetic assets with their underlying risk control algorithm. In short, Mobius Finance utilizes a quote-driven model that eliminates traders' concerns for insufficient liquidity in the markets and offers traders the flexibility to trade anything they want with zero slippage. In addition, the Mobius Protocol is built on top of the Polygon ecosystem, which allows faster transaction speed while maintaining low fees. To help us further understand the logic and technology behind the project, we've invited the visionary behind Mobius Finance project to elaborate on what they've set out to achieve. Joining us today is Pedro Torres, the co-founder and CEO of Mobius Finance. Hey crypto enthusiasts, welcome back to the Altcoin News Podcast. For each and every one of you tuning in, your support is our motivation to keep featuring amazing and potentially disruptive projects. So be sure to like and subscribe if you find this video useful. This podcast series is meant to enlighten you with insider knowledge and expert opinion from professionals and blockchain pioneers. Before we get in, I do have to point out our disclaimer. All information presented in this series is meant for educational purposes only. Please do your own due diligence if you plan on moving your capital into any of the projects that we cover. Your money shouldn't be dictated by anyone ever. With that out of the way, please enjoy our podcast. Hey Pedro, thanks for coming in. So naturally, what better way to kick off this session than to hear about how you got into blockchain, the story behind the founding of Mobius Finance, and how did the team come together?
Sure. Well, everything started, I would say, I had it on my mind for a few years because I got into crypto about 2016 and was only doing mining. Eventually, I moved on to other aspects and then I got really interested in trading. So I'm a developer as well, computer science. And I decided to apply a lot of trading strategies, or at least a lot of the theory that was happening in traditional markets, right? On crypto. DeFi, as we know it now, didn't exist a few years ago. Actually, before 2018, all what we had as decentralized markets was, for example, Ether Delta, which was one of the original ones, and that was really, really primitive compared to what we have right now today. So when I started implementing a lot of strategies on decentralized products on decentralized markets to try to emulate what was happening on centralized exchanges or in traditional finance markets, it was really hard because when you submit an order on an exchange, you have this idea of finality. And finality being that the order is going to get executed either as a market price, if you decide it, or a limit price. Once you submit the order, you're going to know that it's going to be submitted. Unless there's some problem with high traffic networks, like a lot of people are trying to submit at the same time, perhaps you will need to retry it again. But even this retry process won't be expensive compared to what happens in DeFi, right? Whenever you submit an order, you have certain things to take into consideration. Transaction fees, confirmation times, slippage, and of course, since this idea of the Ethereum is a dark forest, all the EV bots or everything else that is trying to front run you on the mempool. So there's four factors there that are really hard to solve for a number of reasons. And especially in layer one. So in layer one, transactions take a little bit longer of time to confirm there, and also they're more expensive. So with this into consideration, I was looking at some Ethereum's layer two solution. I was following the entire debate with various projects that were trying to propose a solution, and then what is called now layer two, which is either side chains or using some sort of optimistic rollup. I decided to go with Polygon. And I was following Polygon back then when it was MATIC, and I said, look, this can solve a lot of problems. This can really help out to create something that is better than everything else that has come in the past. And I wanted to also target derivative, which is the biggest market out there in traditional finance, right? So these are some of the pieces that I was putting together when I decided to create Mobius. And the idea of choosing derivative is because if you ask people what is the biggest market out there, a lot of people think, oh, the stock market, Tesla, Google, Apple, and so on and so forth. But in reality, this is actually the most popular market. The biggest market by value is the derivative market, which I think could be or should be about 10 times the size of the stock market. I haven't really looked at the numbers today, 21st of September, but it's about 10 times the size, right? And I think this is something that is going to be happening on DeFi, that the derivatives are going to take a higher position into what they are now. And answering the last part of your question, when it comes to the team is international. I traveled a lot across the world. Some people that I met in other cities, and then I told them to come work for the project. And some people are, we worked in some projects in the past. So, it's a really strong team. We're international. We have about 4 time zones that we're currently working in, but everything is, coming along really good and really good. Well.
Awesome. To simplify this for potential investors, what is Mobius Finance? What will be the most common use cases for Mobius Finance, and what is the significance of the quote-driven model that Mobius has adopted?
Sure. First thing first, this is of course not financial advice. I'm only providing this for informational purposes and for describing the protocol. I urge that if anybody is interested in Mobius Finance, they should please check out the white paper, terms and conditions. They should do their own due diligence. Of course, they can go to our social media channels and ask questions there. I think it's really important for people to understand what we're doing on the protocol level before incurring into any sort of investment or any sort of risk, which I don't encourage. So with that being said, Mobius Finance, we're the first multi-collateral synthetics protocol on Polygon. What I mean by multi-collateral is that we're going to offer at least 4 collateral types for people to enter positions. So that means that users will be able to collateralize, for example, Ethereum, MATIC, DAI, and the governance and utility token of the platform, which is the MOT token. And then this way they will be able to trade any synthetic assets. Compared to other projects, for example, that only have a single collateral type or a single option. We decided to actually start with 4, and this can also be increased in the future via the DAO governance. Going back to what you just mentioned right now about the quote-driven model or the quote-driven markets, think of it this way. So in traditional finance and even DeFi, there's about 2 popular models. The first one being, let's say, the limit order model. This will be the order book type of orders, where you have buyers and sellers submitting their orders into this long list, which is the order book, and then all the orders are going to converge around a price spread. And then whenever the order crosses the spread, it will be matched against the other half of the order book. The advantage of this is that it's quite easy to implement. The concept itself, it's quite simple. You got people that want to purchase some things, and you have people who want to sell some things. They will discuss and come with an agreement. So it's easy to understand. It's also easy to implement itself. Of course, those are the pros. The cons is that it could be a liquidity issue. Perhaps the next order that is on the order book doesn't have enough depth or amount, and then this could create a slippage. That is one potential issue. And the other problem is lack of liquidity in the order books, that perhaps there might be some market, but then there's a huge disagreement between buyers and sellers, and then basically there's no trading being done, right? So you have the benefit and the not so good things about it. And then you have the other model, which was popularized by Uniswap. It wasn't created by them. They just popularized it. The mathematical theory, or let's say when when the automatic market maker model got conceived, it was done decades ago. But nowadays, we always associate the automatic market maker model with Uniswap. And the idea is that, okay, you would take out all the people that are only representing buyers and sellers, and then they themselves are going to be this liquidity provider, and then they're going to benefit. And of course, this will bring about more decentralization, since you don't need like a huge database on some centralized exchange or a server for people to agree on buying and selling, which is actually what DeFi is about. It's about agreeing in certain things, and positive solve forces are purchasing and selling. And this model has worked really well. It's also simple to implement. Nowadays, we have a lot of experience behind it, and it is quite popular. Problems with this model could be, for example, the impermanent loss, which is really hard to understand for a lot of people, maybe when they come across it, because when they want to participate and have their positions diverge, and then they have impermanent loss. The other risk with this model is that markets can become illiquid really fast. Basically, if everybody decides to take out their liquidity, there won't be enough liquidity for you to take out your original position. So this is also kind of the risk associated with this model. And then what Mobius is doing, we're going for the quote-driven market, or the quote-driven model. And the idea behind this model is that we're basically taking the approach of what is used on commodities market, right? So everybody has this notion in their head. Whenever you want to buy, let's say, gold or silver or precious metals, you will get a quote. You don't see the order book of gold, right? It's not like you watch the order book of gold compared to the order book of, let's say, a popular SP 500 company. So the quote model is that the broker or dealer, they will offer you a quote, and all orders are settled around this price. So you take out the elements from impermanent loss on the automatic maker model. There's no liquidity problems as well, because the quote is the final price for the settlement. And in Mobius Finance, we have built the protocol in a way that is going to use this model to eliminate the problem of slippage.
So what's the logic behind the automatic debt balance algorithm created by Mobius? Essentially, which specific problems in the spot and futures markets do the algorithm set out to solve?
Sure. The ATB algorithm, or the automatic maker model, as you mentioned, it is described in depth in the white paper. Like I mentioned at the beginning, I suggest everybody to do their own research, and they can go ahead and review it for themselves. But the automatic debt balance is a way to make sure that the entire the depth of the platform diverges towards the net zero position. So usually what happens is that on a derivative, in DeFi, there's this problem of the global debt. And usually the global debt, it's not something that it's simple to solve. It's also one of the, complications of doing synthetic assets. There's been a lot of debate about how to improve this model. And our take is this algorithm, which is just a way to ensure that people who are opposing each other, they have an incentive. So let me give you an example. Let's say you take a position on any asset and you're going to go long. You believe the asset will go up. And I believe the asset will go down. So right now we're opposing, right? Because I don't agree with you and you don't agree with me. And a lot of people, will say like, oh, bulls and bears, right? This is kind of the popular way to see it. But what we're doing is we're creating an incentive depending on the total positions that are on the market. If that's some sort of an imbalance, the people who are taking the short position will receive an incentive, and that way it will bring more balance into the platform itself. This is the simplest way to explain it in a quick podcast with you. I suggest everybody to go to the white paper, and if you have any questions, just send us a message on the social media.
If you would like to reach out to Pedro, be sure to check out the links in the description below. Returning to my question, what were some of the significant challenges that your team has already solved? And perhaps tell us a bit about the challenges that Mobius Finance will expect to encounter in the future and the approach that your team will take to solve them.
Sure. So, for example, the product is finished. We're going to launch on a few days, on the 24th of September. But the product itself is finished. We wanted to create something that the people can actually use instead of, deciding to invest in any ways. And like I mentioned, I should suggest everybody to do their own due diligence. But I wanted to create a product that has a strong use case. So the product is finished, and we're also audited by Certic. So we built the product before, doing the IDO, before launching, and we already are audited. That was a huge challenge in itself, right? It was a lot of months of hard work. We opened a beta, which was really successful, and hear a lot of good feedback from the people, and we built this. What we have next, let's say our future challenge, our next challenge is we're going to publish a second audit in October, just because I believe security should be the highest priority of any project out there. It should be the biggest concern for anybody who's trying to build any sort of product in centralized and decentralized finance, right? You need to be audited to make sure that it's safe for the users. After this, we're looking to be launching on Polygon's mainnet. If you go to the website, there's a beta right now that people can use, but it's running on Polygon Mobile. After we launch, we're looking to hold our first DAO vote around November, I would say. And in December, we're looking to introduce other products within the protocol. And then for next year, one of the things that we want to do, and we're already exploring, is that we want to have a presence in Cardano. So this is something we're going to be working on for next year.
Perhaps tell us a bit more about the DAO mechanism that you just mentioned. What will the community be able to dictate in terms of the voting system?
Sure. In terms of the voting system, right now we have let's say a simple approach that every MOT, the token of the platform, which is the governance token, is going to represent one vote. In terms of what can the users vote, we're looking to have a similar DAO of governance with the other top DeFi protocols out there. So in terms of what they can decide to vote, there won't be really too much of a difference of what is being debated on, for example, the big players, Yearn, Maker, Compound, Uniswap, SushiSwap. So when they submit improvement proposal, they're looking to either implement or either modify the same governance philosophy in Mobius Finance.
Interesting. So who are the most likely participators attracted to Mobius Finance? What will the roles be, and what are the incentives in place for continuous contributions?
Sure. I think that probably most experienced traders, they're going to decide to go with Mobius Finance just because of the nature of what we're doing. It is complicated, but we decided to go with, we don't want to be exclude other people, right? So there's a number of ways that anybody can benefit, such as traditional staking. There's going to be also other incentives in the platform. People who collateralize will be able to claim rewards, and we have numerous ways to increase the spread of the platform by joining with other DeFi products out there. Mainly people who want to have exposure to synthetic assets, because the idea of having a synthetic asset is that you will be able to get exposure to the same behavior, same price behavior of the asset without having to hold the asset itself, right? So imagine, let's say you are a user from an exchange, or you were used to using some sort of DeFi market. Let's say you're a SushiSwap or Uniswap user. It's for some reason the fees are too high, or for some reason the thing that you want to purchase is not there because it's not available on the market. Buying a synthetic asset will solve this one of the problems. And the other one is that you won't be able to have multiple wallets with multiple exchanges, with multiple accounts to get that asset. So this is one way to facilitate and simplify things for people. And also, since we're protocol is going to be able to list off-chain assets such as stocks, ETF, and commodities, which is something we're going to be working on as well, and we're ready to go. A lot of seasoned investors are going to be, of course, naturally want to introduce this into their portfolio of assets. just because they want to have this combination. Now that one more important thing to say, all of our markets are going to be powered by Chainlink oracles. So we partnered up with them. There's an announcement that it will go out soon, but just so people know and the information is out there, all of our oracle prices are actually Chainlink.
Obviously, this information is available on the Mobius Finance homepage as well as the Gate.io startup listing page. But just to sum it up for serious potential investors, how does the tokenomics look like for Mobius Finance, and how much of that allocation will go back to the community?
The tokenomics, well, in that case, the MOT token, there will only exist about 100 million of them. This is the maximum number. There won't be any more created in the future. And the market cap will be about 700,000 when it goes live. The tokenomics are available, like you mentioned, on Gate page. It's also available on our website. We have the information ready for people if they're interested in the way we design it. The most of the tokenomics, about 45% of it, that's going to go for the community. Everything is going to be driven towards the community incentive. We have various unlock periods, of course, for everybody who participated early on. So we do have a vesting period, so that is also included.
So what do you see Mobius Finance in exactly 1 year from now? What's the idea behind the driving force set in place for your team to get there?
In 1 year from now, that's going to be interesting because the way I like to say, I like to work on short-term goals, and that will give me the better picture. I can give you an example. If you were to ask, let's say, Coinbase when it started almost 7 years ago, if they thought that they were going to be listed on the on NISA markets out there, the reality is that they will probably say, we just want to be the best one out there, right? We want to be better than our competitors. We want to be better than the other options that are currently in the market. We want to be better than other exchanges. And as a consequence of this philosophy, this consequence is that they actually are the biggest ones out there. So in Mobius Finance, we have the same importance level, let's say, simple importance criteria. We want to be better than anything that is out there. We want to do better as well than any other solution. From 1 year on, we want to be leaders in the industry when it comes to the derivative market. And we also want to have more derivative available. We want to have presence in more than a single blockchain, which is also important for us. We don't want to be limited by Ethereum itself. And we want to have, for example, various indexes as well available for the market.
And to conclude our podcast with one last question, as founder and CEO, do you have anything in mind that would like to be expressed to current supporters and future potential investors?
And like I mentioned, not financial advice. I believe all our supporters should express what they believe we should do. We're open to hearing suggestions from the community, but it's important for people to understand that we're going the full decentralized way. We're going to be supervising and we're going to be helping to develop the protocol, but it's up to the users and it's up to the community to grow the product by their usage, their feedback, and so on and so forth, and so on and so forward. For any of our mentioned investors, it's really important to do any sort of due diligence, and we're more than ready to answer any sort of questions if you decide that you believe you want to go with the Mobius Finance ecosystem, and we will definitely work in the best way possible to make sure that the protocol is the best next thing out there.
If you have any further questions regarding the project, be sure to reach out to Pedro and the Mobius Finance team via the links in the description below to Twitter, Telegram, and Discord. On an important note, the Mobius Finance project will initiate its startup sale for its token MOT on Gate.io on September 24th, which is this coming Friday. If you're interested in participating early, the link is also down below. If you like this podcast, now is the best time to smash that like button. That is all for today's podcast. See you all next time.